Welcome back to another weekly episode, guys. So it was a really good week for the market. I felt yes, the broader market indices, though they consolidated, but I think stock specific action continued, and market was doing the right things. That is something I was really interested in. So the title of the video is why buy and hold is such an important strategy in the market. Before I begin, I'll add one point here. By buy and hold, I do not mean you buy stocks and hold them for 10, 15, 20, 25 years. That is also a strategy. But this video is about buying at the right time and then holding on to stocks till the point structures are valid. And in between, you should not be jumping around too much, going behind newer structures. Just stick to your original structures and then keep adding to those structures. I'll share some results also, but this week I'm going to do my homework in front of you. For the next cycle, I have started preparing and how I'm seeing those charts, which sectors I'm tracking, all of those aspects I'll cover. So, first of all, right at the outset, let me tell you just a word about the current market. There is absolutely nothing wrong in the market. Some routine consolidation will happen. As far as Dow Jones, S&P 500, Nasdaq, all are concerned, all the markets are fine. Do not expect markets to go up every day. So I'll first begin with the entire list, about 30, 40 names out there. I'll just show you how I look at charts. So the first structure is APL Apollo. I'm pulling out this structure because the trade in this particular stock is already done. That is why I can speak more freely about it. Can you see this is a VCP? This is a proper VCP that forms on the chart. So entry was about 14 odd hundred. Now why I'm suggesting pulling out the data of APL Apollo now? Because in the last 1.5 months since I was giving you market update, I was asking you guys to look at the metal sector. Metal sector at that point in time started doing the right things. A lot of stocks like APL Apollo and these stocks were breaking out. These stocks are still valid for the next cycle, by the way. The stock is up what? Hardly 150 rupees. If it is going to go higher in the next 2 quarters, then it'll give you multiple entry opportunities. I also have a lot of IT stocks in my watch list, you will see. So LTTS is one stock I'm tracking. Currently, I don't see a structure there. Look at my base time frame, it is daily time frame. If I don't find any clarity on daily time frame, that is the only point, that is the only point wherein I start looking at lower time frame. So this is a VCP structure in APL Apollo. LTTS, I don't find a structure except that there has been a lot of sideways consolidation, then a breakout. Can you see this? So this stock is doing the right things. It is just that the sector is just not in favor, and that is why it is going to take some time. If you go through my IT update, also IT is going to take some time. We'll come to this at a later stage. One of the banks I'm tracking is IDFC. Again, can you see here? This is all contraction. Mark Minervini is VCP. This is a variation. IDFC, of course, is going to come out with results, I think, tomorrow or on Sunday. I don't know. But the structure is still there. Adani Enterprises, this is one stock that I always have on my radar because when it starts moving, it gives you fantastic trading opportunities. Now, I don't want to talk too much about this stock, but I'll skip making a lot of comments on this because again, this is a stock that remains in a lot of news cycle currently. But just look at this chart on a weekly time frame. What do you see? What is happening? This is a mother candle. Price is still in a range, but there are a lot of hints here. What is going on in the stock? So I think Adani Enterprises should be kept on your radar, especially for the ones who have the appetite to tolerate a lot of fluctuation. If you're a highly risk averse kind of trader, stay away. There are plenty of good stocks out there. M&M I will cover. I will cover M&M in the next 3-4 weeks. Right now there's some corporate event that has happened and I don't want to make some loose statements. You've been hearing a lot of things from many people about what the management is doing and those kind of things. On 4th August, I think management is going to reveal the results, I think, for M&M, if I'm not wrong. I would like to hear what the management has to say. See, stocks falling due to news flow, stocks falling, having gaps and those kind of things are fine. But as far as management can justify what they are doing, you should give an opportunity for management like M&M to come out and put their side of the story, as opposed to all these controversial kind of statements, clickbait kind of videos and tweets that you see on the topic. And quite frankly, many of them who are writing and tweeting about this and making videos on this, they just don't understand what is the business model of M&M. So I'll just wait it out, let the management come out. JSW Steel. Guys, what is happening here? If you look at the structure, this is a beautiful flag sort of structure developing in JSW Steel. So obviously I have on my radar, and I might have positions also. I don't want to disclose any of that. It is your money. You got to do the research. But it's a good structure that is forming. It's a beautiful technical structure that is out there. Federal Bank, of course, I don't see a structure out here. Why? This is lower high and lower low. So primarily you will see I have banks, I have metals, I have auto, and I think I have IT. These are the four dominant sectors that I have in my watch list for the next quarter. Hero MotoCorp, I've already marked out the pattern for you. This is a beautiful flag structure that is there on Hero MotoCorp. Again, results are due around the corner. What I do usually around results is, if I like a structure, I go in with reduced position size, because see, what happens in results is something it's very difficult to anticipate. Sometimes stocks gap down 3, 4, 7, 8%, and you don't want to be caught. So what I like to do, let's say there is an X stock which is coming out tomorrow with the result, I would go ahead and take maybe 20% positions of my intended position size, and I'll then wait out for the results to get over. That is how I do things. BOB, again, this is from the PSU space. It's doing all the right things. I mean, if you look at this is a classic tennis ball action. Again, if you look at this is classic tennis ball action. So it is setting up again. Right now there is no trigger, but obviously I will have this stock on my radar. Bajaj Auto was just recently, a few days back, given a beautiful flag structure. So a lot of stocks that you will see, they have actually broken out, but those stocks are still valid for the next quarter, because what happens is the stock market does not work in a single line, in a straight line up. There's a lot of volatility, a lot of fluctuations. Out of the technical structures that I'm explaining here, maybe 3, 4 are going to work out. But which stocks you need to go behind, that is something you have to decide. I cannot do that for you. Jindal Steel, again, Jindal Steel and Power. If you were tracking metals when I had asked you to track, Jindal Steel was one of the first stocks in metal sectors to break out right about here. Alright, it is now again forming a similar flag. Similarly, it is broken out. So it's all about when you should be putting sectors on your radar. Eicher Motors again got a lot of hammering, mainly because of some competition coming in. I did not follow that space, but I like to look at structures, and what I see on a daily time frame chart is there is a clear lower high kind of pattern in Eicher Motors. So I'll wait it out. I think this is a long-term structure getting ready. If you can see, a lot of times we want stocks to move very quickly as soon as we identify them, but that is not how stock markets work. So you can just draw something out here. Maybe this is some triangle pattern or whatever you may want to call it. This is just consolidation for me on a weekly time frame chart. There's a lot of volatility, yeah, but nothing is wrong. Of course, there is no trigger yet. We'll have to do a lot of close monitoring here. I don't like how these candles have shaped up. Clear gap down, strong volume candles. These are after that price is struggling. So maybe a couple of more quarters of consolidation will happen. But of course, I'll keep it on my watch list. I'll skip Tata Steel. I'll skip Tata Steel due to some reasons, and I don't want to disclose that. But Tata Steel, again, when I asked you to look at metal space, Tata Steel was at 105. Today it is at 120, and it's the leader of the metal space. And the thing about metals is that metals gives you a lot of shakeouts. So if you look at the volatility in Tata Steel, look at it from 115 to 108, then from 119 to 114, and who knows, now it will again fluctuate from 121 to something like 115. So holding this stock, because it's a FNO kind of stock also, you require conviction. Without conviction, you cannot hold this. Actually, this is one counter where I'm teaching something. That is why I don't want to get into the detail of it today. But one quarter down the line, I'll show you what I analyzed with Tata Steel, how I went about it. But let it play out. Due to regulation reasons, I don't want to talk about it today. So National Aluminium, do I go behind such stocks? See, it's far away from 52-week high, but I'm seeing multiple contractions here, then a breakout. So my preference always would be stocks that are closer to 52-week high, that are closer to all-time high. But if I do not find structures there that are appealing to me, then yes, I look for these structures also. And which pattern is this? This is a simple flag breakout with a classic tennis ball action. This is a beautiful tennis ball action kind of chart. If you've studied the teachings of Mark Minervini, ICICI Bank, I mean, it's just an amazing kind of stock. Look at the cup and handle sort of pattern that formed out here. So I'll just roughly mark out the handle so that you can imagine the cup for yourself. So cup is here, and then it has broken out. So whatever you're seeing is just routine volatility and nothing else. Look at the structure on a weekly time frame chart. This is a strong stage 2 structure. All right. So obviously this is also on my radar. Bharat Forge is again a stock that is not doing much since July 21. It's almost at the same level, but it's attempting to break out. The only thing is that I don't find a pattern out here. If I look at these phases, this is classic tennis ball action, an up movement, minor retracement, and then stock heading higher. But quite frankly, unless and until it has a really good kind of pullback, I won't look at it because there's no structure there on the chart. Unilever also, I don't think it's just moving sideways, biding its time. Of course, it's an evergreen stock. Someday it will break out. I don't want to talk about DMart. So we'll move to Bosch. Again, what structure is forming on the Bosch from medium term? Now, when I say medium term, it means next couple of quarters. This is a beautiful flag. Whenever it breaks out, I'll assess the quality of breakout. What is the range of the candle? What are the kind of volumes that are coming in, whether other stocks and auto sector are moving or not. Those kind of things I would like to see. NMDC, again, there's no structure out here. It's a lower high, lower low structure. But in the very short term, if you see, it's doing all the right things. Some kind of contractions. It is trying to take support out here. It's clearly one of the weaker names in the metal space, but it's doing kind of okay things. Bandhan Bank, look at the structure. This is a clear lower high, lower low kind of pattern. I'll never touch these stocks. Sale, doing nothing. It's in my watch list because it's part of the metal index. I like to study sectors and index on the whole, what other stocks are doing, because you get massive insights out of it. Kotak Bank, again, this was one flag structure that I had identified. This terribly failed in Kotak Bank. So ever since, that stock has done actually nothing. So this was one stock where I actually prematurely bought, I think at 2000 or something, 2040 or 30. And then I had to exit positions next day itself because I realized I had made a terrible mistake with Kotak here. I'm just tracking this stock. TVS, again, which structure is this? This is a beautiful Minervini contraction plus flag breakout. If you can just see it, this is a valid structure. Again, look at the contraction. It's a beautiful contraction and a breakout. So this is again one stock I'll definitely be tracking. MRF is not a stock for a retail trader because it's $1,02,000. It's a bit difficult to buy. Ratnamani Metals, again, if you look at the higher time frame chart of the stock, it just keeps moving higher. What I would like to do, see, you got to study the characteristics of the stock, and that is why I pick out stocks and sectors for the next couple of quarters and I keep it in my watch list. I'll tell you something. Yesterday I was watching one movie, Marry Me, of Jennifer Lopez and Owen Wilson. Owen Wilson is a math teacher, and he was suggesting to the superstar that if you sit long enough with the question, then the answer automatically appears in front of you. It's so true for stock markets also. Why it is true? Because if you sit with a well-defined watch list for 1 to 2 to maybe 3 quarters, then the real gem of stocks within that watch list will come to you. It is not the matter of if, it is the matter of when. So these these things you tend to pick up as you gain a lot of experience in the market. Our universe of stocks is what, 3,000, 3,500, 4,000 kind of stocks. But quite frankly, to make a decent living in the market, you don't need those 4,000 stocks. How many stocks do I have? I have just about 40, 50 stocks. And in the month of March, April, I shared an Excel sheet with you of 40 stocks that are identified. I shared the results of those stocks. You'll be surprised to see what those stocks have done. And that is why I'm a huge advocate of selecting just handful of stocks and just sticking with those stocks. Shut out news, shut out Twitter, shut out Telegram and all those nonsense kind of mediums, and focus on your watch list. There will be stocks that will break out. There will be stocks whose price action you'll start to learn. You'll start to understand a lot of things deeply. And that is when you make big money in the market. So in Ratna Money, the thing that strikes me is that this stock is very volatile. Why it is volatile? Every time it moves up, it gives you pullback. So the first thing I note about this stock is I'm never going to pick up this stock when it breaks out. Why? Because invariably it has a pullback. So this is a breakout again. Look at the pullback. This is again a wide range candle, a pullback. Now again, this has broken out. I would personally, knowing the characteristics of the stock, wait for this. If it does not happen, let it go. I mean, it's not the end of the world, but every stock has a peculiar characteristic. And when you have limited stocks in your watch list, you tend to learn a lot of things about those stocks. All right. So I'll now come down to just a sec. Hindustan Copper. Again, on a weekly time frame chart, if you've read Weinstein's book, this is a stage 1 structure. So obviously, I don't want to go behind it. Since we are on Nifty, nothing is wrong with Nifty. We've had a vertical movement, of course, index can consolidate. This notion that market has to move up every single day, this is mainly due to this FNO mania that is there in the market. And every week I'm going to repeat this point. FNO is designed, the entire ecosystem in the stock market is pushing you towards FNO because there are so many people who get rich out of it. You get poor. Your focus has to be on picking out equities. Again, results I'll show you towards the end of the video. SBI, of course, this is an evergreen stock. I think results are due. When are the results? It's on 4th August. So obviously I don't want to touch this stock immediately. In fact, banks right now are just about consolidating. Nothing is wrong. Banks are going to go to massive levels. It is just that it is going to play out over time. It's not that weekly expiry thing. All right. Hindustan Zinc, too much of volatility, up and down, up and down. Right away, I just reject these stocks because again, I've kept it in my watch list mainly because this is part of the metal index. Wipro, I'll come to IT sector stocks now, but how much has Wipro fallen? This was 741. This is 400. That is where common sense is more important. A stock like Wipro is down from 750 to 400. And given how things are going on in the world, technology-wise, it's not rocket science here. I'm not suggesting, please do not take this as an advice to buy or do whatever. But have some basic common sense kind of things in stock market. Put in, what I generally do, I will tell you. What you have to do, that is something you have to decide. What I do is, if I find a really good large cap company that has fallen something like 30, 40, 45%, I put in 10,000 rupees to see what happens. 10,000 rupees, I'm sure in stock market everybody can lose. And that 10,000 rupees, obviously you're not going to lose because Wipro is not going to go to zero. But why I put 10,000 rupees in such stocks? So that, my nature is when my money is invested or my money is put in that counter, then I study that price action closely. It is just who I am. If I don't have skin in the game, then I'm not that attentive. I like to have skin in the game. There are many times when I feel I'm not able to read Nifty or Nifty Bank, I buy some 10, 20 lots and I sit. Because when I buy that, then I start paying attention what is happening because either I'm making money or losing money. So this is a good trick to have, that put in that much amount of money that if you lose, it's not going to hurt you financially. But when you do it, that is when you start tracking everything really closely. So Balkrishna is an auto stock. I mean, it's it's too volatile. I mean, just look at the movement. I don't like such stocks. So, and there's no need to go behind it. Again, why I've included in the watch list? Maybe next quarter it will set up again. Maybe the volatility may subside. It'll form a beautiful VCP. For those reasons, I keep it. LTIM is a technology stock. I'll speak about technology in a bit. But again, the way I look at charts, it's down from 7,500 to 4,800. Coforge, it's down from 6,000 to 4,600. So all these stocks I have on my watch list. Persistent, despite of whatever has happened in the IT space, Persistent has not fallen that much. In fact, it went ahead and made a new high on 2nd June 23. I like such stocks because this means this stock is outperforming IT index. It is also outperforming the broader market index, something like Nifty 50, Nifty 500. Definitely, I will have these stocks in my watch list. Can it form? Is it forming a larger cup and handle? It may be. This can be a handle, or it can be a bit deeper also. This is a beautiful cup. I was reading somebody's comment the other day that cup and handle only works on weekly time frame chart. Guys, let me tell you one thing. That is one reason why books are different and real-time stock market is different. A lot of stocks that I'll show you, that I shared with you in the month of March, April, were all cup and handles and VCP picked out on daily time frame charts. So don't have this assumption, this works only this way, that works only this way. Those are all things that are going to stop you from making money in the market. AU Bank, what is the structure out here? A long-term sort of consolidation has happened here. Let me put out a higher time frame chart. What is this, guys? This is a stock that has seen immense volatility and now it has broken out. Can it have one more quarter of pullback and then maybe form a new base, new VCP structure, then break out? Yes. And that is the reason it is there on my watch list. PNB. Again, this is one stock that is down from 280 to 61, 62. And given what is happening with the PSU sector, who knows what may happen. Plus, it's a banking sector stock, my favorite sector. So obviously, I have all these stocks in my watch list, and that is the reason I've put up PNB on my watch list. And in recent times, if I have to pull out the chart of PNB, after multiple contractions, it is given a good amount of breakout. Currently, it is forming a flag structure. So this can again set up. That is why I have it on my watch list for the next couple of quarters. Tube Investments, same structure. You'll see again and again that I don't do anything fancy in my trading. Simple flag, simple VCP, simple cup and handle, those kind of things. Tech Mahindra, some results came out and stock fell. What has changed structure wise? You got to ask yourself always, why someone will get bothered with Tech Mahindra. I'll tell you, if somebody is entering here when they're seeing these candles and starting to enter, and then suddenly they see the fall happening in the market. By the way, when you're pulling in positions here, your stop loss in the system has to be this, which means you have to take into account 990 at 1220, this as a stop loss before you build positions at 1220. 9 out of 10 people don't do that. And that is why when this volatility plays out, they get scared. But structure wise, if you see, what is this? This is a stage 1 structure that is developing on the chart. The stage 1 breakout actually happened this quarter. Last quarter, this sort of breakout, or this quarter. So till the point this level is not violated, this structure is still valid. Yes, you're seeing a lot of volatility. If my guess is right, I think IT sector results wise is going to bottom out this quarter itself. The worst of IT results will be done in this quarter. When will IT sector move price wise? I think maybe in the first quarter of 24. I'll update about this in the next couple of months, but right now base building is going on. I'll cover this. Maruti, again, what do you see here on something like a daily time frame chart? This is a beautiful flag sort of structure that broke out. Currently, what is happening? That flag structure is getting tested out by multiple long tail candles. That is why I have this on my watch list. Again, simple stuff. Infosys. Infosys is currently having a gap festival, gap up, gap down. Mostly it is. I mean, look at what is going on in Infosys, and I'll tell you why reading charts is so important. This is a gap down. We have had a couple of gap ups. Again, a gap down here. Again, a massive gap down. If you go to 2011. Something similar was happening in Infosys. I'll just show you. Look at all these gaps. Gap down, huge gap down. This is a gap. This is again a gap. Again a gap down. This is again a gap down. One more gap down. Then a gap up. One more gap down. Then a gap up. Are you looking at this circus that was going on for almost 1.5 years? All right, anybody would have got shaken out here, except if you know inside out the business of Infosys. And then the stock just kept on moving higher. So because something is not working today, it does not mean it is not going to work in the next few years. So we are having this again gap festival which we had in 2011 is back again in Infosys. How long can it last? It can easily last. This is where the first gap happened, April. It can easily last this much. Let's see what happens. This urge to make a strong opinion very soon is something that will always get you into trouble. There are a handful of companies like Infosys in the whole world, let me tell you, let alone India. There are a handful of companies like Infosys in the whole world. When HDFC Bank was being spoken about, when it was at 1200, the bank is done and those kind of things, I don't discuss these things publicly with you, but in my community I was writing, it is the only bank in the world that is growing at 20% given its size. How analysts find fault with such companies, baffles me. I just cannot understand what people want in terms of results, what they want in terms of quarterly numbers. A bank that is growing 18 to 20%, given its size, there is no other bank in the world, given its healthy balance sheet. Let me add this point because I know some of you will Google and find some US banks out there that are horrible in terms of asset quality. All right. So same goes for Infosys. Infosys was at 2000 roughly in December 21. Today it is at 1340. All right. I hope you get the message that start looking into it. It's not going to play out so soon. Currently, IT is the most under-owned sector in the market. The commentary this time around was really, really concerning. Can Infosys drop from 1340 to 1100? Yes, it can. Can it drop to sub 1000? I don't know. I don't predict. I don't have that much wisdom plus stupidity within myself to predict prices. But it's a beautiful company. It's a beautiful company that is down from 2000 to 1340. I will put in 5-10,000 rupees and then start studying price action. Let us see what happens. That is my approach. Wellcorp, this is again a metal index stock. Classic tennis ball action. This stock is doing. If you read about it in Mark Minervini's book, this is classic tennis ball action playing out with a flag structure, beautiful breakout. All this that you see, these minor pullback, and stock is doing all the things right. That is why I put it up for the next quarter. Currently, the move has happened a lot. Ideally, I would want it to come down here in this particular quarter for better risk reward. All right. IndusInd. It's a beautiful bank. Again, very similar to Wellcorp. It keeps moving higher. Whenever Nifty Bank sets up again, it will set up again. This will be one space where I would actively like to trade positions. Again, maybe not this particular quarter because generally the quarter between this July and September phase, like I've mentioned in last 2 week videos, are very tricky in terms of stock market. So maybe next quarter this is going to play out after that. Same goes for Axis Bank. It's a beautiful structure. This was a earlier flag breakout that played out in month. Maybe a retest is happening of this, but the structure is absolutely fine. TCS. TCS was at 4100 in December. Today it's at 3355. HCL Tech was at 1400 at 1100. Tata Motors, I mean, not Tata Motors normal chart. Tata Motors DVR rally is something that, you know, I'll do a video on it someday. Let my complete trade get over. How I structured positions, where I picked it up, how I massively compounded money in this particular stock. I will share those details once I'm out of the stock and regulation wise I'm safe. Emphasis stock was at 3700, today it is at 2250. I'll tell you one thing, every stock goes through this phase, all right, and then it forms a stage. In my IT sector video also I discussed this with you. No one, and let me tell you, no one is asking anybody to put money in IT stocks right now, but start looking out for opportunities. There is a huge difference between looking out for opportunities, doing your homework every day, and then finally pulling the trigger when the time is right. Remember, this video is about buy and hold when the time is right. All right. So all these stocks that I'm showing you today, this 30, 40, 50 stocks, out of this, I'll take positions in only 3 or maybe 5 stocks when the time is right. But I'm just as of now explaining the structures that I'm seeing on the chart. Ashok Leyland, and I think at all-time high. Again, it might go into some consolidation for the next couple of quarters. I'll definitely have this stock in my watch list. Auto sector is also doing well. Generally, when banks and auto do well, then you get a sense that economy in general is also doing fine. HDFC Bank is an evergreen stock. Yes, it has not given any return for how many months now or years? 2 years it has not given any return. But it's only a matter of time. HDFC Bank, if you see, is one of the strongest banks, not in India, not in Asia, in the whole world. It's just a matter of time. Have it on your watch list. Nobody's asking you to do anything today, but see what it is doing from a little longer term chart. It's doing something like this, right? There are only two things that can happen. Either the stock can break down and move here. In that case, you do nothing. But if the stock does this, study the range of the candle, see what kind of volumes have come in, and then decide whether you want to do something or not. Motherson, again, because it's in the auto sector, index that is, and Sonacon, newly listed company, went up vertically. Why I have it on my radar? Because if I see the weekly time frame chart, I see some sort of, again, similar kind of structures. It's not ideal. It's way below 52-week high, way below lifetime high. But there's nothing wrong in keeping things in your watch list and studying. So this is the only thing. So if you look very closely, IT, metals, banks, and I think I also have ID, metal, banks, and auto. These are the 4 sectors I have. You'll see I don't have FMCG in this list. I don't have consumer durables in this list. The reason being that this is a trading list for me. All right, this is not an investment list. FMCG and consumer durable sectors, I like to invest, and I just like to park that money in those sectors and leave it. They're richly dividend paying stocks, and consumption and FMCG story is such a beautiful story in India. It's just the start. That is the beauty of Indian market today. It is just the start. Now I will come to the buy and hold part, and let me see. All right, so this was, I hope you can see this, it will blur out, so I'll just read out because I had the image, I'll just pull it out from Excel. This was the list that I started sharing in the month of March last week and April. And all these stocks in my videos, if you're regular on this channel, you would have seen me talking about these stocks. These are the first 40 stocks that I went behind. Actually, I went behind 60 stocks. Those 20 stocks I don't want to speak today because they're still very close to, some are close to where they are today in terms of current market price. So that won't be ethical. None of these stocks now are there for a fresh trade or this thing. That is why I can talk about it. Anybody who buys any of these stocks is going to have losses because stocks will pull back. But look at what has happened. Look at what happens when you buy at the right time and hold. So this is just no scale in data. This is just the data where the patterns were identified, and I'd put it for you also, maybe after a lag of 15-20 days, but I'd put out this, I'd explain which Mark Minervini and Stan Weinstein's patterns were playing out as and when they were playing out on the channel. So Saxsoft, I'll just read it out: 88%, Reflex 153%, Mrs. Bector's 52%, RK Forging 75%, Kirloskar Bros 76, Anantraj 62, Newgen 70, RVNL 33, TA Wagbag is 41%, KEIS 37, Medanta is 37, KPIT belonging to ID sector 29, HAL 40, Wonderla 40, Anupam Rasayan 20, Data Patterns 40. I'll just read out: 34, 49, 46, 6%, 22, 75, 28, 18%, 44%, 12.5, 12.6, minus 0.82, 14%, minus 1.79, 25%, 22%. Then minus 2, positive 3, minus 1, minus 6, minus 5, minus 18, minus 12. What do you see here? What you see here is 80 or maybe 85% stocks that have massively outperformed Nifty. Just handful of stocks, 1, 2, 3, 4, 5, 6, 7, 8, or maybe 15 stocks that have underperformed Nifty or just at par. Obviously, there are some stocks where I've compounded money massively because you keep adding to your positions. But how did I get these results? Someday I'll make a really detailed video on what I've done, how I've scaled in. The point to show this is that when you buy stocks that are breaking out at the right time, you have to do nothing else but to sit on the sidelines and hold your positions. One day X stock is breaking out. Next day this is breaking out. Case in point, yesterday pharma sector was up 5%. I can guarantee you go back to Twitter timeline, YouTube videos, people are all about pharma, and this is a poison. It's a poison because you're not understanding that a job of people who are doing things genuinely, that is fine, but there are people out there who are putting out stocks, buy this, buy that, this was the OI pattern in this pharma stock, that is how it moved up. That is all clickbait. It's all clickbait. It works because you want to see which stock is going to double, and some of the channels these days are putting out thumbnails that are quite frankly shameful. This stock is going to become the next 15,000 stock, 20,000 stock. Guys, your money is hard-earned money, and don't go blindly behind hot stocks, hot sectors that are breaking out today. Have some common sense in reading what is happening in companies that have fallen 30-40%. Try and position yourself in some of these companies for the next couple of quarters and see what happens. Going behind the new hot sectors and hot stocks will get you into trouble. I teach one thing in my community, that buying breakout will more often than not get you into trouble. But buying a pullback will very rarely get you into trouble. That is if you know how to buy a pullback. So this breakout game that you see that is there, OI expansion has happened, and aggressive put writing has happened. Look at this. This all happens when it has happened. But if you want to, the reason why this list I have put out is because all of this was shared in real time. There is no hindsight list building out here. And why I've been able to do this? Because these stocks I was tracking for the last 2 quarters. And then I was tracking these stocks since November, December, and then the trade setup happened in March. So I'm showing this to you right now which stocks I'm tracking. I'm just tracking 30-40 names. And if you see all our large cap names, all our mid to large cap names, no small cap name is there. The reason, because I already have these holdings. I'm not looking to exit unless and until the structures start to really deteriorate. Nifty is up 13-14% on an average. Do you know what that list has done? I sometimes wish I had the quality of bragging. I would have shown you what simple things you can do in stock markets by just following some basic teachings that are available in books that have been written by Mark Minervini, Stan Weinstein, William O'Neill, that cost you 1100, 1200, 1500 or 2000 rupees. For the same content, you buy in these useless 1 or 2 day events that are sold for 1.5 2 lakhs, and you learn nothing. So common sense. Common sense is something that no one can teach you in the stock market. Common sense is something I can scream at top of my voice. You will think I am frustrated about something or I've gone crazy. That is why he's talking so much about this point. But the thing is that people with a lot of common sense do immensely well in the stock market, and people who are highly intelligent struggle in stock market many a times because they just cannot come out of their opinion about what is happening or what can happen. This top is forming, that pattern is forming. Stock market requires uh, our legend Virender Sehwag's approach. See the ball, hit the ball. You know, I'll just digress for 1 second. People talk about Rahul Dravid or the great Sunil Gavaskar, the great Sachin Tendulkar, or VVS Lakshman, but in Test cricket, there is no one, including Virat Kohli, I'll tell you, there is no one who has come in Test cricket who was as good as Virender Sehwag. Because Virender Sehwag used to set the tone for everybody right at the open by breaking the spirits of the bowler, and then it became easier for someone like Rahul Dravid, Sachin Tendulkar, and so on and so forth. What was his approach? His approach was very simple. Many times I've heard his interviews. His approach was, I'm singing songs, the ball comes, I hit the ball. That is the approach you require in stock market. In the later years, he struggled because I think he used to think about the previous ball where he got beaten, and with age, this thing happens. Even when I turn 55 or 60 in trading, I'll start worrying because it happens. This is natural. But your ability in stock market is determined by one quality, or your results will be determined by one quality. Number one, of course, you have to do the homework. Think logically. Risk reward is paramount. But after all these things are aligning, you have to forget about what has happened in the past. In the past, if you have made losses, it does not mean you are going to make losses in the future. This is a thought process of someone who is extremely low on confidence. Don't be low on confidence. If you have not done well in the past, analyze your mistakes. Almost everything that you require to become a really good trader in this market, I have disclosed it for free on this channel. Go through it. But you have to put in the effort. I cannot come and do right click for you. I cannot come and mentor you. That is something I just cannot do. But that effort has to come with you. That clarity, that clarity of thought process, that has to come. That has to come from inside, and that takes time, that takes experience, but that also takes effort. It takes effort because doing this, that not thinking about the past and just playing aggressively the game you understand, it's a bit difficult. It's difficult, obviously, I have to acknowledge that, but that is where practice makes you better. There's a proverb, the more you practice, the better you get in life. And it's true for stock market. I, for one, have a simple way of identifying stocks. If you've read Stan Weinstein's book, I only go behind stocks that are in strong stage 2 structures, which means they are clearly heading higher. See, when a stock is clearly heading higher, let me pull out one example. I'll just pull out some name that is just heading higher one way. If I can pull out, maybe ICICI Bank is something I can just see if it's. So ICICI Bank on a weekly time frame chart is just heading higher. This is one way movement. All right. This intermittent volatility is not a bear market. That is the problem. That when you see this happening, and if you are someone who's buying, let's say here at the top, at this point, if you see stock prices moving lower, you have to mark out the next pivot level, which is this, which means ICICI Bank can fluctuate in this range and still be in an uptrend. If you cannot do this, then your time frame is wrong, your expectation is wrong, and you are too hyper active in the market. You want to do that right click, buy today something, check it tomorrow. You're going to remain poor. I know you don't want to listen to this. I know there are people who are selling you pipe dreams out there that scalping or high frequency trading and FNO and those kind of things. It's your money, guys. It's your wish. But if you select your time frames right, and I don't think personally you need anything below daily time frame. If you stick to daily time frame for your trades timing, weekly time frame for your analysis, you're going to do immensely better in the next 24 months. If you don't, come and curse me. I will accept, and I will hear, and I'll see your mistakes also. But if you move below daily, hourly is also a respectable time frame. But if you're below that, 15-minute, 5-minute, or sometimes in my communities, if somebody writes to me, ST, I'm seeing this wide range candle on 15-minute chart, I reply to him, what is this 15-minute chart? Who has told you to see this 15-minute or 30-minute time frame chart? Why? Because a movement on 15, 20 or 30, 35-minute chart, let me pull out that for this week itself. So what is this candle, guys, on Nifty? A nothing kind of candle, but let me switch. Look at this. Whoa, this is a huge fall in the market. You know what? This huge fall on 5-minute time frame chart is actually a small tiny blip on a weekly time frame chart. Are you understanding? People who are trading or encouraging you to trade, maybe they can do it. Maybe they are skillful enough. I don't want to take away this part from anyone that only I'm skillful in the market or what I'm teaching only works. No, that is not true. But for majority, I speak for the majority of people. And when you are trading on the right time frames, I'll just show you the day this volatility played out, what I was writing. I hope you can read it. Nothing is wrong in the market. It is just routine consolidation. Markets are heading higher. A big scary candle on 15 or 30-minute chart is nothing but a blip on higher time frame chart. Let the FNO traders, I'll just remove this because people are very touchy about FNO subject, but I hope you get the point. The reason why I can write this confidently in real time is because I started getting very good at the market when I eliminated this 5-minute, 10, 20, 30-minute game from my trading, and I stuck to higher time frames. I stopped taking stress. I started enjoying weekends. Why don't you think I come out with a video every day for you or some post? It's not required. I do one video a day because there is a reason behind it, a logic behind that. And 1 week kind of analysis in market is more than enough. So when I talk about buy and hold, it means you need to know when you build such list, but the preparation starts few months back. The preparation starts when you keep tracking these stocks, and then at the right time you see conditions improving, then you scale in. That is the thing. So right now, in the next 3 months, when I know the returns from stock market are not going to be that great, I'm doing the homework today. These all stocks, I'm just tracking. I'm not going crazy and buying anything or doing anything. No, I have eliminated all the sectors. I've kept just 4 selective sectors: banks, auto, metal, and IT. These are the only 4 kind of sectors that I am interested in the market for the next quarter. If I don't get an opportunity, I'm happy to be sitting on the sidelines. I'll trade Nifty Bank, and I'll still do well. But that is not going to happen. Nifty, Sensex, they cannot move up without the combination of banks, metal, IT, auto. One of these sectors will make a big move, and I will capture that. Why? Because I'm hyper focused on that sector. Now, it's not to say that this is the only list that is there. So let's say auto sector starts to make a move. I will definitely see which are the small mid-cap stocks that are also moving. I don't like talking too much about micro cap, small cap stocks because number one, small mid cap stocks sometimes fall 10-20%, and I don't want any one of you to get caught in any of those stocks after watching my video. That is why I sort of stick with very stable kind of names. And let me tell you, these large cap stocks also give you massive kind of returns. I'll pull out the DVR chart once I'm done with the trade. But Tata Motors DVR, in DVR terms, I picked it up in the month of April. You can open the chart and see what has happened. There were multiple opportunities to to scale in. And there was also some news flow this week that there is some delisting or something might happen. And okay, I'll just show you this. So this was my Tata DVR trade. Let me see if the image comes up. I don't know. Let's try. All right, this was the DVR trade that played out. These are all scale-in points, and this chart does not have the 16-17% up trade also. But why I'm showing you this, because you don't need small and mid cap and micro cap stocks to do exceedingly well in the market. You can do well with stocks that are well established companies that are actually moving up. DVR moved up from on an average 240 to, I think today it's at 400 plus. I hope you get the point. So keep your watch list limited. Keep your sectors limited. There will come in time in the market where the next cycle will start, where stocks will start heading higher. You will just know it if you have a limited watch list, as opposed to new hot stocks, new hot sectors, and those kind of things. I'll definitely update about these stocks in the next couple of weeks, or it is going to take some time for these stocks to move, because markets have moved up already a lot. It cannot just keep heading higher. That is unrealistic expectation. And think about my point about common sense. Common sense is something you can develop. Keep your if you're an intelligent person, keep that intelligence out on the table and see the chart, what the chart is suggesting. If what else may or whatever, that is irrelevant in stock market. What is happening today is the reality. Yes, you may be able to visualize a lot of things because God has gifted you with a lot of brains, but the market does not care about your brain. The market cares about what you think, what you see is happening on the chart without your intelligence, using your common sense. Like what is happening in Tata Motors right now? It is forming a long wick. But from a long term, what is happening? This is a beautiful structure. What if stock comes down to here? It will still be beautiful for me. Why? Because it is heading higher, and no chart can head higher vertically in one way. If it does, start being a bit careful. So have a great weekend ahead. Take care and be safe.